Many people are worried about inflation. Are we really getting inflation now? It's very hard to say. So let's just discuss the whole story, the bigger picture. Due to COVID 19 in March 2020, the stock market decreased over one third of its value. So that's why the Fed immediately used a lot of different measures to stabilize the market. The most notable way is they issued promise they will buy 3.5 trillion treasury bonds to the market, and it's equivalent to printing 3.5 trillion dollars. It's not they physically printing money. They use the other monetary tools to do this. It's a little bit complex, but before we dive in, if you would like to receive more economic analysis videos like this, don't forget to subscribe. And back to our topic. So there are three different rules you need to understand. One is Fed, and the central bank. Central bank is the rule they will issue bonds, and usually when they issue bonds, the private companies, investment banks will buy those bonds. The Fed also will buy the bond, but in general they also only own 15 to 20% of the bond, and the rest of them owned by the investment banks, private investors, or other countries. And how the Fed can create money is the Fed will spend money to buy those treasury bonds buy back from those private units. So in this case, the Fed will buy 3.5 trillion worth of bonds from the private investment bank or some other investors, other foreign investors as well. Then when they buy those bonds back, $3.5 trillion will be put into the market. Means the private investment banks originally spent maybe 1 trillion to buy the US bonds to earn the interest rate. So they put 1 trillion into the treasury. But now, because of the Fed want the money to be more active, so he spent this 1 trillion to buy those bonds back. Then the private investor suddenly have 1 trillion back. So they would definitely use this 1 trillion to do other purchase. They would not just daily sit in the bank. They probably would just spend that in the stock market. And there are 3.5 trillion purchase will be made in 2020. So that's also the reason you can see the stock market actually bounce back really quickly after the deep dive. Basically the biggest drop in the history. 33% or 35% of its value just evaporated overnight, over 4 days. Then it bounced back. Then even now you see the economic of the US is actually the GDP the growth is minus, and it's like minus 10, that kind of things. But the stock market is at its all-time high. Why? Because of these things. Because the money creation, 3.5 trillion. That's a lot of money. That's already 20% of the whole US dollars, and it actually doubles the amount of active the dollars that's actively in circulation. Means people really spend. It's double the amount of that. So it's a big thing. So that's why you see the discrepancy between the economic and the stock market. I think this is the biggest reason. So as for the inflation, it might happen when the investors sell the stock, because now those big monies mostly are in the stock market. So you will not really feel that your daily purchase, the kind of consumer pricing is increased, because the money is still sitting in the stock market. But when the time comes, the investors they sell the stock, then they will have more money, and what they will use their money for, maybe buy the real estate or some other goods. So that's when the inflation will really happen. And a lot of people are talking about this, and this may be a little bit complex, and many economists will have their own point of view. If you ask 100 economists, they maybe have 101 different point of views. But I do believe the general trend is like this. It's just super complex, too complex for the general public to understand. You just have to understand the treasury bonds issued by the central bank and the Fed. The Fed, it's the way the Fed can create money is to buy back those treasury bonds. It's not like they put 1 trillion, 3.5 trillion in the market directly. No, they buy back those bonds. So now the Fed owns those treasury, and those treasury are issued by the central bank. Also, that's just the relation between that. So think about it, and that's what I want to tell you. And maybe the inflation will not happen, but not happen anytime soon. But it's actually happening. You see the stock market. You see the PE ratio is at all-time high. Means the stock markets, those stocks are actually overvalued. And why is it overvalued? Because the money is not worth as much as it used to be. At least it's not as worth as much as it was 1 year ago. So that's actually one kind of inflation. The stock becomes more expensive. Means money they can buy the same productivity of one unit. You need to spend more money to buy the same unit of productivity. So there's effectively as infection happening. But it's just that now in your daily lives, that's why you don't know. Okay, so that's my view on that. And if you would like to do more research, Google it. You will find a lot of resources. And if you would like to receive more economic analysis videos like this, don't forget to subscribe. And other than that, I will see you next time.